Welcome to the first video of the series, the new series that I'm teaching on the channel, and this one will be on liquidity. But before we get into what liquidity is, we should start with the basic structure of a candlestick. So you'll know by now, if you're interested in the charts, if you're interested in the markets, that most people have tendency to look at the charts with what we call candles. So we have a candle there, but some people back in the days especially would trade with bars, which is basically something like this, while others would have traded with simple lines on their charts. So I prefer candles because it allows me to see where the opening price was, the low, the high, and the closing price. I know many of you might not know what exactly those words mean, but it's basically this. Looking at this candlestick right here, well, a candlestick is basically one bar right here. We notice that we opened up down there, we traded lower till that low point right there, the low of this candle, and then we at some point went high to that point, to the tip, then retraced a bit, creating the body there. So it was basically an open, a high, a low, and a close. To label this more clearly, let's use a tool. We can see this was the opening price, that's the closing price, this was the lowest point, and that's the highest point of this candle. And I think it's already visible that the highest point and the lowest point of this candle is something that's very clear, very obvious. That's the highest point, obviously, and that's the clear lowest point. The opening price is what might be confusing some people. How do we know, like take this white candle here for example, how do we know whether this opened here or this opened here? Well, that's where bullish and bearish candles come in. So this here would be a bullish candle because we closed higher than where we opened, and this is a bearish candle because we closed lower than where we opened. So that's the opening price, traded lower, and then we closed there, making it a bearish candle. So the other, why I brought up the different ways of seeing the charts moments ago was because back in the days it would look something like this. It would look like this, which I forgot what they're called now. They just called bars here on TradingView, but you can easily see when it's drawn out as a bar where the opening price was. It opened, it traded down, it went up, it came here and then closed, went to the next candle, opened, traded down, went high, came lower, closed. Next candle, opened, went down extremely, went back up, and then closed immediately where it made the high. So as in this case, you can see the high is exactly where the closing price is. And then of course the opposite happens when it's a bearish candle. We opened, and that was the highest point of this candle. So we opened, fell off, came back in the range, and closed off there. So we can move on to the next one. We opened, traded lower, closed off there. Notice in this case, the highest point and the lowest point are the opening price and the closing price at the same time. So this is an open, high, low, close. In my future videos, they're probably going to see me refer to these numbers up here on TradingView. Notice there's an OHLC. That's basically open, high, low, close. If you wanted to get the exact numbers of where this candle, for example, opened, you'll be able to see it up there on the top left corner. That's the opening price, which is at 1.71975. The highest point of this candle was 1.72003. Lowest point is 1.71974, and then of course the closing is 1.72002. So those are the exact numbers. That might not be significant now, but I just wanted to show the basic structure of a candle to show you when a candle opens and closes. Let's see if we can identify how a candle actually prints. Right now it's on bar display mode, but you can easily see a candle literally print live in front of us. This candle opened up here, you saw it fell off and it closed here, and then a new one opened. Same thing again, we opened up, we went high, it's going higher, it came back and closed. This one opened up, it's falling off and closed there. This one opened up, went up, you saw it was once a bullish candle, so it was once green, then fell off and became bearish. The same thing here, opened, fell off, closed. Open, fell off, it's pushing higher, making it green now, and then closed up. So it closed higher than where it opened, making it a bullish candle. This is same thing here, same thing here, open higher, closed up there, open trading higher, closed there. So we can continue doing this obviously over and over again, but there's no need for us to go through that other process. Of course, the same applies with candlesticks, which is what I'll be using to teach the entirety of this course / mentorship, if you want to call it that. You'd notice this candle created a low at the same place it closed. That's why we see it's basically a flat bottom there, because it closed exactly where it made the low, and this one has a wick there. So just like actual candlesticks, you'd know that there are wicks on the top portion of a candle and a tail at the bottom portion of the candle. Of course, that's if you cut the wax of the candlestick, you'd notice there's a tail there as well. So I'll be referring to them as wicks and tails, or top wick and bottom wick, depends on what I use, but I'll be calling them wicks. So moving on to the actual teaching of liquidity. Liquidity is basically found in one easy way. I will teach important levels of liquidity, because as you just saw now, many candles were printing all at once. How do you know what liquidity is more important than the other one? And I'll get to that, but for now, to identify liquidity, we basically have to know how to identify a swing low and a swing high. Let's look at this set of candles here on the left side. Notice how we have a bearish candle right there, we have a bullish candle there, and then consecutive bearish candle. A swing high is basically formed where a candlestick stands like so. Looking to the left of it, you see a lower high. Looking to the right of it, you see a lower high. So remember how we identified open, high, low, close. This is the high of this candle, this is the high of that candle, and this is the high of this candle, therefore making this a swing high. So that's a swing high. That's that's a swing high in this example. In this example here, I would say this is also a swing high, but you cannot see the highest point of this purple candle sticking to the left of it. So let's pretend for a second that we can't see. So in this example, do we see any swing highs? No, we don't, because even this high that's sticking out here, we see that there's a lower high to the left of it, but we don't see anything to the right of it. But we can identify a swing low, because we have a low of this candle being right here, the low of this candle being right here, and to the right of it we see a higher low, therefore making this a valid swing low. Let's draw this out properly. So that will be a swing low right there at the low of this structure. So that's basically a swing high and a swing low. Sometimes you will hear me refer to them as buy side liquidity and sell side liquidity, because that when a person is buying, let's assume somebody, as this candle printed, we know it closed bearish and then opened there. Someone, assuming that somebody just came in and bought at this point, at this exact opening price for this bullish candle, you would assume that as they are buying, wherever their target may be, whatever their take profit level may be, they would put their stop loss at the swing low there, because it's a logical level to place your stop loss. So a stop loss, for those that don't know, is basically a level that you tell your broker, that you tell the markets that this is how much I'm willing to lose in this trade. So yes, I'm sure that it's going to go to the upside, but in case it goes to the opposite direction, I want to cut it off here. That's important when it comes to risk management and money management as a business, which is what this is going to unfold to. So this low right here will be a significant level for us, because that's where liquidity will be residing, because everybody else would be taking that swing low as a stop loss. It's a very visible place that most people are going to be putting their stop losses at. So keep that in mind. Anywhere that we can find people placing their stop loss is a form of liquidity. So that's a liquidity there. In this case will be a sell side liquidity, because it's a swing low, and in that case up there will be a buy side liquidity, because it's a swing high. So this is the difference between a buy side liquidity and a sell side liquidity. We will go deeper into this, but knowing this alone is 50% of the work that has to be put in on the way I trade and the way I make money, and I'm able to make ends meet. So keep that in mind, that buy side liquidity, sell side liquidity are two main types of liquidity that carries every other type of liquidity there is. The second thing that we would need to know are inefficiencies, but we will get to that in a later video. For now, we're covering liquidity and what they might mean. That's a swing high, that's a swing low, and those are the two main types of liquidity. Let's see, based on the teaching of liquidity that we just picked up now, if we can identify some liquidity levels on live price action. I know this is not the prettiest chart right now, because many might be asking, what are these gaps and why does it look the way it does? Well, we'll cover that later on. But right now, I want to see if we can identify important liquidity levels. Let's do that. I think right now, if I was to ask you guys to identify a significant swing low and wanted it to be shown on my chart, I don't know where you would have chosen, but I'm hoping that you would have picked something like that. Why do we choose this swing low? Because we can see why do we identify this as a swing low? Actually, firstly, because there's a low to the left of it and another low to the right of it. When you draw that out, we can see that price is most likely going to reach that. But while we wait to see how price plays out here, can we identify another swing low? I'm just going to hold for a few seconds, and I'm hoping that you guys also identify this swing low right there. So that's another sell side liquidity. Now that we've identified sell side liquidity levels, could you identify buy side liquidity levels? Well, we have this one. That's a swing high. To the left of it, it's lower, and the right of it, there's another lower candle. So that's a buy side liquidity level that I can pay attention to. Another one that I will pay attention to would be this one. And let's see if we can point out two more buy side liquidity. There. And finally there. Of course, when you look to the left, you'll be able to see many buy side liquidity levels. You'll be able to identify that this was also a swing high. It was a buy side at some point. This was also a swing high, a buy side at some point. This also is a swing high. Left of it, lower. Right of it, lower. So this is a swing high, making this a buy side liquidity level. So yeah, we can identify many buy side liquidity levels, and you can see that as price is printing, we have the tendency of going to liquidity levels. Price seems to go from buy side to sell side to buy side to sell side to buy side to sell side. Of course, one thing to know while we're here is that there's also the 50% of every range that we just created. So let's take, for example, this low to that high. When you measure this range in half, you'll notice how price went up into into the higher portion of this half and then continued lower to the lower portion of this half. So one thing to note there is that price seems to have tendency to also meet the halfway points of these liquidity levels. So let's see if we can zoom out to a higher time frame. Well, higher time frame basically means I'm zooming out the chart more because I'm very zoomed in when I do that. And zooming out to, let's say, this, you'll be able to see the same thing when you zoom out even more, because before we're looking right here, all that we were looking at were within this candlestick right here, but here we can see the same thing applies. We have a swing low right there, left of it is higher, right of it is also higher, so this makes this a swing low. That's a sell side liquidity. So you can see how price took the sell side liquidity, and what did it do after doing that? Went straight for the buy side liquidity. We have a swing high there, we have a swing high there, we have a swing high from there, and of course we have more buy side liquidity levels residing up here. This is actually a buy side there. Then obviously we have those main ones way up there. So one thing I wanted to do while we're doing all this was, you'd notice easily that if I continue doing what I was doing just now, we're going to have so many buy side liquidity levels and so many sell side liquidity levels. So the next question would be, what liquidity levels are important? Which one is more important than the other one? And where do we know, how do we know whether price is going for buy side next or sell side next? Like right now, we have taken out this sell side liquidity. How do we know how far to the upside is this is going to go? Because while we took out this sell side liquidity, we also created another sell side, another swing low right there. So how do we know that price is not going to come down there? Well, it could, it very much could. I wouldn't like it to in this specific example, but this is a valid sell side liquidity. And when you look at this low, remember the open high low close that we mentioned earlier, this is actually a sell side liquidity level, because this low is lower, the purple one is lower than this white one on the left. So this is an actual sell side liquidity as well. So yeah, we have sell side liquidity all over the place and buy side liquidity all over the place. So how do we know which one is more significant than the other one? Well, that's the next thing we're going to talk about. When we look at this chart, we can see up there that this is a 15 minutes time frame. A 15 minutes chart basically means that each candlestick represents what happens within a 15 minutes time span, and we can see there on the right side on how long it takes for a specific candle to close. So this is a 15 minutes candle, this is a 15 minutes chart. Let's try and zoom out a bit to, let's say, a monthly chart. On a monthly chart, one candle here essentially represents 1 month. So taking for example this previous candle, this is the candle from the 1st of April 2024. We can see that the price opened up here, went as far as this low, and then went as high up as this high before we open the next one. So the thing, while we're here on the monthly time frame, I wanted to point out important liquidity levels, which are basically previous month's highs and lows. So in this case, we can agree that this right here is the sell side liquidity for the month of April, and this right there is the sell side, is the buy side liquidity for the month of April. We may not agree that this is a buy side and sell side, but when you go on a lower time frame, say for example a daily chart, you'll be able to see that this was indeed a swing low, and this actually is a swing high, actually two swing highs. So we got a swing high there and another swing high there. This leads me to the second type of liquidity that we have, which are equal highs and equal lows. Let's label that appropriately. So we can agree that these are equal highs. They might not be perfectly equal. Sometimes, yes, you do see them being perfectly equal, but as long as they're relatively equal, I consider them to be equal highs and equal lows. In this example, we don't have a scenario of an equal low, but those are equal highs. That's another sensitive type of liquidity. So we've already seen that the previous month high and the previous month low sensitive levels. The next thing that we noted now, previous swings, previous equal highs and previous equal lows. So right now, if you ask me where price is likely to go, I would say, well, because we have swept sell side liquidity there. Last month we swept sell side liquidity from the liquidity generated in February. I'm expecting us to now move to the liquidity generated in April and probably March as well, because this high was made on the 11th of March. The date is written down here, by the way. That's the 11th of March 2024. So we have buy side liquidity there, which is the high of March, and we have equal highs here, which is the high of April. So I think with me giving these two examples, you can already see that one type of liquidity are based on types of liquidity in general are based on time. So the fact that I just pointed out the previous month is already showing you that you need time for price to be valid. So in this case, we have time, which was April, and we look at the high and the low of April. So important liquidity is based on time. In this case, I'm looking for these equal highs to be the next liquidity to be cleared. We will see as we progress into this series whether or not these highs will be cleared. So that's the other type of liquidity: old highs and old lows, session highs and session lows. And speaking of sessions, we can now go down to a lower time frame, back to the 15 minutes chart that we were on before. A session basically is the different markets, that the different time zones that are operating in the markets. Take for example, we have the Asia session. Asia session basically has the Asia session pairs or currencies operating the most, and I'm going to do this. Of course, I could draw this out manually, but I decided to use an indicator for that. So we have here, for example, New York PM. That's what NY means. Here we have Asia. Here we have New York AM. And then here we have London. So we can see in this example, we have London session high to London session low. The London session basically starts from midnight New York local time. If you noticed right there, my time zone is in New York. So all markets operate using this time zone. So we have midnight New York local time as a vertical line delineated there, and we have the 8 o'clock New York local time delineated there. Notice how price came and swept these liquidities, swept the lows of London session, the lows of Asia session, and the lows of the New York PM session the night before that. And we can see after sweeping that liquidity, after sweeping the lowest point right there, and after sweeping the swing low right there, price immediately ran to the opposite direction, which was now the London session high and the previous highs that were generated before that. And now we are expecting price to get to the previous month's high, which is the April high that we're looking for. So the same applies with intraday charts. We can see that's the midnight opening price, the MO price there. We opened up in midnight, we swept sell side, we swept sell side, and we swept sell side. So right now we are in the London session. I'm expecting the New York session to continue taking price higher to now clear all these buy side liquidities that has not been cleared, including the previous day high. That's the PDH right there, the previous day high, which is also this high, the New York AM high that was created yesterday. So important liquidity levels are based on time, including sessions, days, weeks, months, years, and quarters, and of course going on and on and on from there. I believe that's all I have for now, and as always, as I already said in the first video, in the introduction video for this series, my main teachings are going to be happening in the Telegram group, the channel that I again will link in this video's description. So if you have any questions, if you have any inputs, if you have any suggestions or anything at all, please reach out to me there. I will answer every question that you may have. So yeah, for now, stay safe, good luck, and good learning.